it over to Dennis Truly.
Thank you, Jack. Again, my name is Dennis Trulib, and I'm a controller for our client accounting team here at First Service Residential. My background is in accounting and finance, with almost a decade concentrated solely in HOA accounting and finance. Budgeting and its process for some board members can be an overwhelming task. The budgeting process for all of you guys can be stressful at times, as decisions that are made by the board can affect every single homeowner financially. So with that, let's start to help ease the strain of this process. And the first thing I want to touch on is the budget process and timeline. The key to an effective budget begins with a plan. Some important areas to focus on while developing an effective budget include the following. First, review your governing documents and any legal requirements. First thing you want to take a look at with your governing documents, and specifically, is your bylaws, to ensure that you're compliant with rules in place for your association. These bylaws can include anything as far as when budgets are needed to be approved by, when residents should be required and notified, or just simple if each unit is charged equally or based on a percentage of ownership. Next, you want to create a budget timeline or a schedule. This, to me, is one of the most important parts of the budget process. Without a proper and reasonable timeline, your budget process can turn into a major headache. In order to create an efficient and effective timeline, I like to think of 3 W's: the who, the what, and the when. Who is involved in this budget process? This could be financial committee members, which I'll touch on a little bit later in this slide, social or lifestyle committee members, or designated members of the board. The next W, what, is what are their roles? Make sure to understand, and more importantly, that those involved in the budget process understand their roles in the process. This is what we call who has the R. Finally, when. When are the deliverable dates? When can you, as a board, expect those deliverables? I specifically like to work backwards when it comes to deadlines, and from the date in which we'll discuss a little bit further in the next slide. Next, you want to identify board goals and objectives heading into the next fiscal year. For us, it's never too early to start your planning and your objectives. It could be simple increasing revenue, reserve revenue funding, future capital projects, enhancements within the association, or it could be planning for specific expenditures such as irrigation repairs, tree trimming, power washing, etc., based on your association. The next part of the process has come to light more in the past few years than really ever before, and that's consideration of the economic environment we're living in. Without getting into economics 101 class here, we live in an ever-changing economic environment. We've seen so much dramatic increase in inflation over the past few years, which has triggered an increase in cost nearly for every vendor service provider. Whether it's a cost of material, a labor cost, a transportation cost, any of these type of labor costs could increase and have trickled down to your association. None of us really have a crystal ball when it comes to this, or else I would not be doing this. So we want to just be able to know and understand, and more importantly, identify these economic factors that can impact your association. And this will put you way ahead when it comes to planning for your budget. Additionally, a very important step in the process is analyzing your financials and your previous budget. How have you fared during these current years compared to last year's? What expenditures were not accounted for properly in past years that can help you better budget for the future? Budgets, like I mentioned earlier, effectively start from day one, current year-to-date financials. By reviewing and understanding your monthly financial packages supplied by First Service, you as a board are able to see trends, spot variances throughout the whole year, and this should be taken into consideration when planning for your next year's fiscal budget. Mark will touch base on this a little bit later in the presentation. And finally, if you have the luxury and volunteers, which is important to do so, establish a financial committee. You may have some homeowners who have great financial backgrounds, have experience in budgeting and real life practices on their full-time jobs, who can contribute to the process of creating a budget, but who don't want to or possibly can't commit to full-time serving on the board. This helps lighten the load for the board during the process and can truly foster further confidence and buy-in from the residents of your community. Next slide, please. So this is a budget prep schedule. It is not gospel, but it is guidelines and what we consider kind of milestone points throughout the budget process. As I mentioned before, creating a timeline is the essential part of a budget process. Working backward from a deadline date can help move other milestones within this timeline into place. For the purpose of this webinar, I'll just be going in chronological order and touching on some key milestones and approximate months you should be targeting. The first I want to focus on here as we leave this slide up is July and August. July and August are crucial months based on a December fiscal year end in the overall timeline. This is when your budget begins to take form and live year-to-date data and budget recommendations are being inputted into working templates. Discussions between First Service, board members, committee members are now actually being put in pen to paper. Another crucial period of this timeline I'd like to call out is what I like to call the holiday benchmarks. You should plan on wrapping up the budget, approving the budget as a board member between Columbus Day and Halloween, sometime towards the end of October. Again, none of this is set in stone, but these are key benchmarks and milestones to consider. Thanksgiving, between Halloween and Thanksgiving. So obviously there are just benchmarks. Actual dates will vary based on your association and your bylaws and meeting schedules. However, it is key to remember the budget process starts on day one of your fiscal year. It's not just during budget season. It's an ongoing process where discussions are taking place throughout the year. Actual results are being monitored by yourself, First Service, and plans are being formulated to ensure a smooth process. And with that, I'd like to thank you for your time and pass it over to Mark.
Thank you, Dennis. Good morning, everyone. My name is Mark Hameter. I am a regional director with First Service Residential. I have been with the company for 6 years. I've been in the industry for about 15. I oversee a group of managers in about 25 communities in my region. I want to go back to what Dennis just talked about, the timeline. It is super important. We call it budget season because it's a season that we work on this. It's not a day or a few days that we work on our budgets. This is not an exam that you can cram for, the night before and be done with it and pass the next day by any means. Having said that, as far as budget preparation goes, I want to approach this with the lens of zero-based budgeting. So we use zero-based budgeting, which basically means we start with a zero base and we justify all expenses and then we zero out the budget. The goal is to not have any money left over in our operating expenses. Now, that doesn't mean that some money's not going to be left over. It can be, and if it is, then we typically will sweep those funds into reserves. There's not a one-size-fits-all budget for every HOA. If you think about different sizes of communities, we have condo, HOA, COAs, HOAs, high-rises. So every HOA budget is slightly different or majorly different. In my area, we have 2 sister communities that were built on the same day by the same developer and same amenities. They couldn't be more different, and the budgets reflect that. So what it really boils down to are your income and expenses and what the people want. What do the communities want in their community, and how are we going to pay for it? The budget process should be a partnership with your management company. What does that mean? That means we will do the heavy lifting. Okay, it should be a concerted effort between finance committee, treasurer, board, and us, our managers, and myself even. As a regional director, I'm actually attending several budget meetings this season, August, right now, with the managers and the finance committee. So it's a team effort. The more eyes we have on the money coming in and the money going out, the better. It is definitely a collaborative, concerted effort. And my experience has been that when more people are involved, it's just more accurate, and there seems to be less problems in the long run. Another big item we do is we're going to review the current year financials and the end of year projections. So this will give us a year-to-date income and expense, and likely where we're going to end at the end of the year. Now, in addition to this, we can drill down on each line item, right? We have the ability with the keystroke, since we've been paying all the invoices throughout the year, and we've also been collecting the assessments. We can quickly just drill down on any line item and find out where we are. Are we high, low, coming in short, coming in over? And this is valuable intel when we're building the budget for the following year. Next topic or next bullet point is we're going to review your contracts and determine the potential increases and the need to seek alternative proposals. This is part of the heavy lift that I was talking about. This is very time consuming. Back to the cramming for the exam. This is not something you can do in a day typically, especially if you're getting proposals. If your landscape contract's going out for bid, or another large, let's say you have on-site security or 24/7 guards, then that takes time. These are big contracts that vendors typically want to make sure they're putting pen to paper and they have good numbers. And it's not just something you can, typically not just something you can just call around and get pricing for. So again, heavy lift, time consuming. The good vendors are busy. They just are. They always have been, in my experience. And for many of them, it's budget season as well, right? So back to busy. Everybody's busy. So it's going to take some time. Obtain guidance from the insurance experts for the market increases and renewal. The insurance market has been quite volatile lately, in the past several years at least. One of the hugely valuable additional services that we offer at FirstService Residential is we have an in-house team of experts. They are employed by FirstService Residential. They are truly subject matter experts on insurance. HOA insurance is different than regular insurance in the world, so to speak, just like our budgets can be a little bit different than other budgets in corporate America. We utilize these experts. They will join board meetings if we ask them to. They will join finance committee meetings. They'll even definitely help with budget numbers for the following year. Next point is we obtain guidance from utility companies for expected increases. This can be a challenge. Anybody that's ever called the power company or the phone company, know that you've been on hold for quite some time. One of the workarounds to do this is we can sometimes check their websites, and they'll put some data on there of projected increases. We have, if we've been managing your community for a while, we have the historical data already in our old budgets. We can pull those up pretty quickly and pretty easily. And then inflation is something that you always need to consider when adding for utilities. I've not seen any utility prices go down in my career, not yet. If the association has payroll, determine wage and benefit increases. Back to the timeline, back to the heavy lift. This takes time. This is not something that typically you can just pick up the phone and find out all these numbers. Often we're going to have to check with the health insurance company to find out rate increases. Workman's comp, are there going to be increases there? We need to know this going into it. Back to my experience with health insurance, I've not seen those rates come down in my career either. Understanding the consumer price index, or the CPI in your area. Dennis spoke about trends, and this is a good indicator of trends. So the CPI is a measure of the average change over time and prices paid by consumers, you and I, for goods and services. Basically, how much goods and services have increased. The CPI is a good indicator of inflation, right? Why do we care about this for HOA budgeting? It's because it gives us a good idea of rising costs. Additionally, many contracts have CPI increase built into them. So that goes back to the heavy lift, back to the combing through the contracts, when we're building next year's budget. We'll help you with that, and we'll find out those CPI increases. They also vary by state, so we'll drill down and help you with that, find out what the CPI is in your state, and typically add that amount to those line items. Finally, my final talking point is consulting your reserve study. I'm not going to go into this in much detail because Anna is going to talk about this shortly. She is a subject matter expert in this arena. I will say it is a great budgeting tool, especially long term. And it helps you if you're thinking, when we do a budget, it's not just what are we budgeting for next year, right? We're also thinking ahead, 3 years, 5 years, 10 years. And that's where the reserve study really comes into play. What are our dues going to be, or our assessments going to be next year? What are we expecting to be in 2 years, 5 years? These are not necessarily things we need to know or have for next year's budget, but they're good issues and items to keep in the back of our mind and keep notes somewhere. And that's where your reserve study really comes into play. That's it for me. I appreciate you guys listening. And with that, I am going to pass to Anna Smith.
Thank you, Mark, and welcome everyone. My name is Anna Smith, and I have worked for FirstService for almost 14 years in various roles. I'm currently a regional manager. That means that I manage a portfolio plus support and train other managers in our offices. This morning, we're going to talk about reserve study in a little bit more detail. As Mark said, the whole budget process is a partnership, and this is another partner that can help you with budgeting. The reserve study is a guide or a tool that helps the association capture all the common elements and components of the community. The purpose of the study is to be able to have a realistic estimate, and I say that in quotes, of how much the association needs to put aside each year in order to save and reserve adequate funds to replace the components of the community. And I say estimate because it is a fluid number. The reserve specialist will use industry standard costs all over the country, and they will also factor in inflation and possible interest earned on funds. The study should be conducted by a third-party accredited engineer. There's a cost for obtaining this report, and those funds can be planned in your operating budget for the year, or it could be held in your reserve fund. The components that you have in your community could be things like your pool, clubhouse, parks, sport courts, roofs, roads, it goes on and on. Or you might just have a few things like the monument at the entrance of your community. Either way, the association should have a plan to save for when those components need to be replaced or are damaged in any unforeseen situation. And then the timeline for this reserve study, it should be done, I say at least, or recommend at least 6 months prior to when your budget must be ratified. So as Dennis talked about that timeline, back up 6 months from that final line to have that report done. Of course, this could be affected by the workload that the engineer or reserve specialist you choose has. So you definitely want to think about this early in the year. Excuse me. So preserving and enhancing your market value, if you think forward and plan to ensure the financial future or financial position of your association, as Dennis said, the board should set goals and objectives. They should be proactive instead of reactive. And the reserve study helps us do this. If an association waits to make replacements or even defers maintenance, the association can look aged or in disrepair, potentially affecting the cost, the values, of your home and of the property in general. Conversely, if a community that is well maintained and makes those replacements in a timely fashion, will have greater curb appeal and can enhance the value of each individual property within. And I say this as a former real estate broker, that the look of the community when somebody drives in is huge to obtaining sales and protecting that property value. Now, these components that we're talking about in the reserve study, sometimes they're large components that take a large amount of your reserve funds. So when you start the conversation with your reserve study specialist, you can determine the current state of your reserve funds and how to plan ahead. If the company doesn't have enough reserve funds for a project, one option is to go and do that project in phases. For instance, a townhome community that has to replace their roofs. If you have 15 buildings, you could consider the replacement of 5 buildings each year for the next 3 years, and then continue that rotation forward. The engineer can determine where that rotation starts by evaluating the conditions of the roof and starting where that need is the greatest. So that's another option. Then the other one is preventive maintenance versus planning for the future. This is always a big question. Should your reserves be used for regular maintenance, or should they be used for future expenses? They can be used for regular maintenance, but best practices tell us to plan ahead for those regular maintenance items in your operating budget. The reserves can help you save for large projects like repairing balconies or repainting a building or a clubhouse. So the question to ask is this project done routinely every year? Is it something you do every year, like pressure washing? Or is it something that needs to be done every 2 or more years, like the replacement of roofs or of siding, or a pool being resurfaced or something like that? Funding for these is another big question. So the best way I can explain this to you is to give you an example. I worked with a condo community that needed to replace their roof. Unfortunately, the previous board did not plan well, and the current board had to implement a special assessment and take out a loan in order to cover this major expense. Once that was in place, the board came to us and asked, how can we avoid this ever happening again? It was a very painful process for everyone. So we started by initiating a new reserve study, discussing with the engineers all the concerns the board had, and all the other major projects that they wanted to get accomplished that had been deferred. The board took the reserve specialist's advice and followed their plan to the letter. They budgeted an increase in regular assessments to cover the reserve funding that had been recommended, plus to pay the loan payments and to cover all the operating costs. They held a town hall to explain to all the owners this planned increase of assessments at the rate that they were going to hold that rate for the next 3 years. When they had turnover over the board, they explained this vision to the incoming board to make sure that they were also in alignment with them. And this turned out to be a great success story of a board setting goals and a vision for the benefit of the community as a whole. Right now, they have completed all their major projects, have almost paid off that loan, and have a healthy reserve fund balance. Excuse me. So one of the things that you want to do is use that reserve study. Once the reserve study is in place, use it. When you go out to bid or send out a request for proposal, the reserve study can act as a strong tool. When I prepare bid sheets for boards, I place side by side all the new bids that came in, plus a column for reserve funding projections for comparison. Early in the year, the board should set aside a time to meet and review the existing reserve study and plan ahead for that year. Again, the reserve study is a great tool for boards and management companies to use to establish a calendar of annual projects and replacements so that you're not caught off guard. So a big takeaway is to implement these recommendations and stay on course. Like the example I referred to before, the best investment you can make is to use the study and stay on this course. Raising assessments or dues can be difficult, but if you take the time to explain to your community the needs and benefits of saving for the future, they will also commit to this plan. And lastly, you're not alone. You have the partnership of the reserve specialist and your management company to back you up. As subject matter specialists, you can lean on them to guide you and support you through this whole process of budgeting and planning for a financially healthy community. And now I will turn it over or back to Eileen.
Thank you so much, Anna and Mark and Dennis. Great job. Without further ado, I'm going to get to as many questions as we can given the time. But please know that someone will absolutely follow up with you to answer your questions if they were not answered. The first question goes to Dennis. What is the most effective way to explain the budget process, including bidding, to residents?
Yes, thank you. I think the most effective and efficient way to go about would be transparency. Explain to your residents and your homeowners the process that you're taking to ensure that you're doing everything as a board and what you were elected to do in the best interest of the association and its residents. I would also remind them that you too are a resident of that board. So decisions that you are making as a board is also affecting you personally in your life. So I would definitely be transparent on that and just explain that you've put a timeline and process in place and you guys are adhering to that process.
Excellent, thank you. Mark, the next question goes to you. Can you further discuss zero-based budgeting in the context of HOAs?
Great question, Eileen. Yes, so we're not in business to make money. This is not Wall Street, right? We are in business to be transparent with everybody's money. Remember, it's everybody's money, right? So the zero-based budgeting part is don't approach it through the lens of a profit. Approach it through the lens of, like I said in the beginning, like if we put it in a line item, if we budget $100,000 for landscape, let's spend $100,000 for landscape because we want a beautiful community. So again, it's about zeroing out your budget and not having the goal of a profit towards the end. Not to say there won't be money left over for reserves that we could sweep that, any extra funds that are not spent into reserves.
Thank you. Our next question goes to Anna. Can we use reserve money to deal with huge increases in property insurance?
Hi, Eileen. Yeah, that's a great question. The reserve funds can be used for any expense that the community has. So if they have not budgeted for enough insurance in their operating budget and it's going to compromise all the other line items that they have, yes, they can definitely borrow from their reserve funds. It's not great best practice. You should try to adhere to the recommendations that like Mark mentioned, the insurance specialist, will give us a forecast But if that forecast doesn't comply or doesn't end up being what, it ends up being more expense, then yes, you can definitely take it from your reserve.
This is Jack. I just want to interject. Every line item should stand on its own. So a lot of associations with the increased insurance have special assessed for specifically that reason. If you do have to borrow money from reserves at a specific time, it's imperative that those funds are paid back, and there's an absolute schedule to do so. It's not the best practice. It happens. We've seen associations very much affected by the increase of insurance. Sometimes it's done after the budget is completed. So using reserve funds can be done, but it's really essentially you're borrowing from yourself, and you must have a payback period and timeline for that.
Fabulous. Thank you to you both. Next question is going to go to Dennis. While the overall budget is balanced, meaning income equals expenses, how does one deal with monthly budgets where there may not be enough income to meet the expenses?
That's another great question. So when in a case of a monthly budget where you're looking where certain months may not have enough assessment income to cover those deficits, we like to look at that as a year to date as a whole. So my recommendation would be to take a budget and look at it from a annual perspective to ensure that the amount of assessment collections that you're budgeting for is covering for each one of those expense line items that you're budgeting for.
Thank you. Next question is for Anna. Can you please, what is the typical cost of a reserve study?
Another good question. So a cost can vary by region, demand of the market, how large your community is, or how complicated the components are. Most reserve specialists will do an estimate for you for free. An association can get, or we recommend they get 3 bids if you've not had a reserve study done before from different various third-party accredited engineers that specialize in HOA reserves, and compare their reports and the cost. Make sure you're comparing apples to apples. If you have an existing study, that cost of the update will be less than the one before, because they already have those components listed, and they're just going to come back and update all the different numbers. I've seen the range go from 3,000 to 10,000, depending on how large that community is. But they can give you that number at no cost.
Thank you. Mark, this one's for you. It's a little bit long. Please give some insight into the general ratio between operational expenses and annual contribution to reserves. My research of other condos in our downtown market showed that reserves were between 28 to 34% of operational expenses. We are doing a reserve study. However, I want to be prepared based on your experience regarding this ratio.
Yeah, I think I'm going to kick that question back to Anna, since she is the reserve study expert on this call. I will say there's not in my experience, not a percentage that we should be putting. It just depends on the big picture budget. Anna, are you comfortable answering that question?
Right. Yeah, I agree with you, Mark. It's not based on a percentage per se. It is based on the numbers that are in your reserve study. So a lender or an attorney will look at what your reserve study recommendation is, how much funding you should have for that particular year, and compare it to what's on your balance sheet, what you actually have in the bank. And that delta, that percentage depend on that lender. Right now, we are seeing that, especially for condominiums, that they're requiring that you be funded almost to 100% of what that recommendation is. Or if you want to look at it a different way, your budget, your operating budget should include reserve funding up to almost 25 to 30% of your budget. So if you're budgeting for $100,000 a year, $30,000 of that should be going to your reserve funds to make sure that you're keeping that healthy and you're planning for that future. But again, that number can vary depending on what you have already existing in your fund.
And Anna, while I have you, I just need a clarification. Did you say that the cost of the reserve study comes out of reserve funds or operating funds?
Well, that can vary too, Eileen. You can definitely budget for it in your operating budget. If you know it's coming up, you know, okay, this is the year we're going to do our reserve study. You can drop that in your operating budget and just pay for it. Some communities that prefer to put it in their reserves and just budget a little bit every year in their reserve funds. And so when the time comes to do their study, the money's sitting there waiting and ready to pay for that expense, especially the communities that have that higher cost for doing the study.
Fabulous. Mark, how do you communicate with homeowners the difference in monthly dues when your community is divided between different towns and county?
Sorry, repeat the question.
How do you communicate with the homeowners the difference in monthly dues when your community is divided between different towns and county?
Well, the monthly dues or whatever or assessment is what we call it. They are what they are. I don't know why living in a different town or county would make any difference unless cost of goods, back to that CPI we talked about earlier, are much higher in one town than the other. We have several associations in my area that straddle different counties. One in particular straddles 3 different counties. This is a waterfront community. And HOAs do not pay income tax. They do not pay property tax. The property taxes are spread out through the common area, or spread out among the owners. So I don't see how that question would be applicable to taxes, because that's not really something that we deal with. Does that answer the question?
Hopefully it does. If not, we'll give the person a minute or two to respond. But in the meantime, we'll take a question over to Dennis. If a certain part of the community needs a major repair, like a signed parking structure, what would be the best way to cover this cost? Can the money be taken from the reserve, or do we need to increase the monthly dues for that certain section to cover the cost?
Yeah, that's a great question. So there are a few avenues you can do here for something of that nature. If it was something that was particular as part of a reserve study, something that may be existing that just needs a major upgrade, we would look at using reserve funds and going back, like Anna was speaking to, the reserve study. You can also take a look at what your annual assessments, your assessments for the fiscal year are, and then play with that budget in that time period that I spoke about between July and August to kind of really gauge where maybe we can reduce some of the budgeted expenditures, or maybe include that line as an operating item. The other option, which we, do not really want to go down that avenue, is potentially looking at a special assessment or something ancillary to on top of that normal assessment. But first thing I would look at is the reserve study, if it's part of that reserve study, if it's considered a reserve expenditure, and then how much is that reserve account funded, and then maybe make that up in additional reserve funding for the current budget.
Great, thank you, Dennis. Mark, what I think might be our last question is, should you do extra assessments to cover shortages or increase dues?
extra assessment and dues increase is the same thing. Again, a budget is simply total expenses for the community divided by the number of residents, right, or the number of units or owners in the community. So again, dues and assessment are the same thing, and I think that's just semantics, but it costs what it costs. If you have to, with any expenditure, if it's not affordable or doesn't make sense for the community, then you can leave it out of the budget, minus certain items like insurance.
Thank you. We're going to turn it back over to Jack Basile.
Huge thank you to Dennis, Mark, and Anna for the very thorough overview of the budgeting process. We hope you're walking away today with some great information that your association can use immediately. As always, the replay of this webinar will be sent to you next week, and you can find all our webinars on our website at fsresidential.com. On the site, there's a wealth of great information and resources to help you effectively lead your community. Thank you, and have an amazing rest of your day and weekend, and we'll see you next month.